Money. In business, those who have it get to make the rules. But as you acquire funding for your startup, your obligations increase faster than your cash flow. And the options for the entrepreneur: venture capital, credit card bootstrapping, private equity, bank loans? Where do the choices begin and where do they end? Today we're going to talk about, you guessed it, the money.
This is The Language of Business with Greg Stoller.
How are the numbers 24, 63, and 82 related unless you're calling a football play or preparing for the math section of the SAT? But to Don Nelson, they're not just numbers, but actually the registrations he needs in order to do his job. Don, welcome to The Language of Business.
Thanks for having me.
So you've worked as a CFO, an investment professional, you've counseled entrepreneurs in getting funding, you've raised money for funds. Interesting background. How transferable are those skills amongst those diverse areas and industries, et cetera?
Well, if you have to look back in the history of my career, I started as a CPA and I did that for close to a decade. Then I was a principal investor for close to a decade. And at the same time of that principal investing, I was overlapping fundraising.
And are you principal investor for your own account, for other people?
For my own account. But you get to see and have a great deal of perspective of what is good and what is bad. Counseling entrepreneurs, you can tell them what people are looking for, and namely investors are looking for, and how to get to present their company or their opportunity to deliver what the investors are looking for.
These days we are working through a jobless recovery and a weak economy, but yet the financier's mission continues to be to maximize the rate of return.
Yeah.
In these tentative times, for lack of a better term, has that perspective been tempered at all?
The temperament tends to come nowadays from the entrepreneurs, the CEOs. They have learned that putting leverage on top of the equity that's given to them from the investor, for example, in the LBO space.
And for the benefit of our viewers, LBO is?
Leverage buyout space. So the investor in that space wants to use as much leverage because you get better returns. But the CEO doesn't want to do that because it puts his company in a much more
precarious position.
Yes, exactly.
If they don't perform as intended.
Exactly. And so, that's where it's become tempered, because the CEOs have learned from talking to other CEOs, because that's where they tend to learn a lot from, is talking to other people who have done it as CEOs in the past.
So from the perch that you're sitting on, what do you consider to be a successful rate of return?
Well, in my business, a successful rate of return would be 2 times the amount of money invested or 3 times the amount of money invested. And on an internal rate of return basis, one would say that it would be 25 to 30% return, somewhere in that area.
So this is from the time the capital was first invested to the time the exit strategy occurs, or almost on an annual basis?
No, it's from the time that the money is invested in the business and then to the time that the money is returned to the investor. So it's measured over time that way.
And do you care whether the exit strategy is a sale versus an IPO?
Well, that's a little bit of both questions. IPOs tend to bring higher values, but they also tend to put the management team and the business underneath the lens of the public. So there's a little bit more difficulty there because you have a management team that's never managed in the public before. Whereas with a trade sale, it's here's the business, thank you very much, and here's your money.
And do you find that people get stock or cash in terms of that trade sale occurring?
It can come in a matter of different ways. It could be stock, and cash, and it could be earned out over time if you hit certain thresholds of performance on the business that was purchased by the company.
Do you have a preference?
I prefer the trade sale, just because...
Meaning paid in cash or
Yes.
paid in stock?
Oh, well, I think I would prefer paid in cash. It's over, and there's not still more time at risk with the capital.
And then you can choose to invest that cash as
Correct.
you see fit,
Correct.
including in the parent that might have
Right.
bought you, etc.
If you wanted to, that's
Right.
how you could do that, yes.
From the entrepreneur's perspective, they jokingly refer to VCs as being vulture capitalists, but yet more and more entrepreneurs in good times and in bad tend to keep going back to VCs for funding. Why is that?
The VCs can tell if something's good or bad, and they've gone down the path before with an entrepreneur who's had an idea and helped them develop it. Whereas the entrepreneur may say, if I went on my own, I wouldn't have the experience around me. I wouldn't have the person who could help me recruit a management team. I wouldn't have access to the markets and the channels to sell the product into. So the VC gives a lot more than money. It's their experience, their leadership, all those areas.
So do you think it's still possible for an entrepreneur to bootstrap based on credit card balances or take a mortgage on their house, or are you still advocating that they go for professional management?
Well, I think you could do it either way. Bootstrapping you could do, especially in the internet space, because the world of internet commerce has become much more pedestrian. You don't have to be a $25 million company to put together a company or an opportunity and sell something and get revenues from it.
So let's talk about those numbers, 24, 63, and 82. How long did it take you to pass those tests? Looking back on it, was all of the time investment worth it?
The time and investment were all worth it. And when you said those numbers, I'm a math guy, so I'm sitting here trying to say, are they prime numbers? Why is he saying these numbers? How do they fit together? And yeah, so they were difficult tests to take, but they're tests that I need for my company, Harken Capital. We're a broker-dealer. And so those are the tests that I needed to take, and they take about a couple weeks to study for each of them.
And would you say you continue to use that knowledge today?
Yeah. My business is pretty myopic because I only do private companies, but we use all that information all the time.
Thanks, Don. Don Nelson, Managing Director of Harken Capital. These days, every U.S. newspaper seemingly has an article about China. Unfortunately, a lot of the recent discussion is about the Chinese recession. So now, isn't this the perfect opportunity to invest? We'll talk with Aaron Tsai, a mainland China engineering executive who thinks about these very topics on a daily basis.
Next on The Language of Business.